Hey guys, I hope you're well. So I haven't been posting much simply because I haven't been trading much. And I haven't been trading much because there hasn't been a lot of trading opportunities for me. Well, at least if you know me, I trade a lot of patterns, and there hasn't been a lot of patterns lately, and the ones that have appeared have not gone according to how they usually go. So if it was a rising wedge, it usually would just continue going, and because of, I don't know whether it's because of market play or whatever other factors are included, but so I haven't been trading much because of that, and secondly because I'm writing the bar exams. So so we're going to focus a lot on fundamentals. I think that's an area I haven't focused a lot on. So the first thing we're going to focus on is the correlation between crude oil and the Canadian dollar. This is a helpful correlation. I know I usually talk about the US dollar and gold, but with what's been going on, it's a little bit hard to focus on that correlation because, as you know, gold usually is a store of value. So when things go down, there's an economic recession, gold usually goes up and the US dollar goes down. But if you look at the charts, the US dollar has just been going up, and gold has just been falling. So I don't know if Bitcoin has now replaced gold as the store of value, because a lot of the coins have been shooting up while gold has been going down. So that's another reason, because I usually trade gold. So gold right now has just been falling, cryptos have been going up, and cryptos isn't really my area. I've been watching a lot of Siam Kids content, so I can really learn a lot more that may replace gold as a store of value. So let's look at another correlation. I know I've talked about the calculation of correlations, but I haven't really given an example that you can see using the patterns that I trade, and hopefully you trade as well. So let's say you've done your correlation calculations and you've realized, or maybe you don't know, crude oil and the Canadian dollar have a positive correlation, right? So a positive negative correlation. So it's the same thing with gold and the US dollar. When the US dollar goes up, like we're seeing, gold goes down. With oil and the Canadian dollar, it's the same thing. When crude oil goes down, the Canadian dollar goes up. So a clear example of that and how you can use that as a trade is this crude oil. This is crude oil for the past couple of months, and as you can see here, you would say this is a bit of a downfall, and we're expecting price to fall below this area. But then this rising wedge forms, and then this was a perfect opportunity to sell. Now I didn't see this coming. I don't know why I missed crude oil. But yeah, this is a rising wedge, and it turned out beautifully. And so how would you trade this? You would trade this as the usual rising wedge, and then you sell. Now your confirmation would also be going to the Canadian dollar, right? This is an example of the Canadian pair. It's the Canadian dollar versus the euro. Now you don't want to use the CAD versus the US dollar, because that won't necessarily give you a clean picture, since there's also a correlation between the US dollar and oil. So you might want to switch to something like the CAD euro or CAD and a weaker pair, so you can get a clearer picture. So basically this is the CAD, and if I could do this, if I can get this right. Okay, there we go. So at this point, sorry about that. So at this point here, when price really breached this area here, so this was the first test of the resistance area, second test, third test, and when price breached here, this was a confirmation to buy. Now I wouldn't buy this because I have no basis to buy besides correlation. So you want confluences. You can't just buy because there's a correlation, right? But you want confluences. Is it a pattern you trade? Now you can add this shape as a pattern you trade and say, yep, I'm going to add a trade here, which is great because this does look like a bit of a triangle. So you can say, okay, this is a pattern I trade, buy there, sell on oil. And there you go. That's just how you use correlations. Now, what may be quite dangerous is when people take this 100% negative correlation and they make it look like it is a given, like it's a win-win. Put your entire portfolio, put your entire 100% trade. That's not how it goes. But basically it means this is a high value trade and you do want to trade it. And then when you see these pullbacks, you can add more positions. So when price pulls back, add another position, 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 price pulls back, adds another position, and then take profit. So I hope you enjoyed this, guys. Thanks.